Well, the White House bracing for job growth numbers to potentially turn negative for the first time since President Biden took office as a result of the Omicron spike. Let's bring in Capitalist Pig hedge fund manager and Fox News contributor Jonathan Hoenig and Market Gauge Group Managing Director Michelle Schneider. Good to see you both. Thanks for being here. Michelle, so many of our economic problems begin with the labor shortage that we have now. 11 to 12 million. I've heard figures close to 13 million unfilled jobs out there, and little companies are hurt hardest by this. The bigger companies can afford to pay more and get the workers. But does this administration have the ability to really end the labor shortage that we now have in this country?
Well, currently, probably not. There's so much that has to happen in order to get the labor market back. We can't even really seem to get the infrastructure package going, which I felt was the best hope to get more jobs in. But we have problems even beyond the administration. Because of COVID, CEOs are saying also now it's their biggest concern in terms of growth, even in their own companies. But we also have mothers who aren't going back to work because of the fact that they can't get child care. And we also have a lot of immigrants that are no longer working or even in the country. And on top of that, we've had the baby boomers retiring at record numbers. So the whole labor participation rate in terms of the jobs has really increased, which is not a good sign and doesn't look like it's going to be abating anytime soon.
Yeah, it's a perfect storm. But Jonathan, going back to the number that Grady came out with that we heard of last week, Americans now get 22% of their income from government. That is a 40% increase from the historic norm of how much Americans get from the government. How do we phase that out? We've got it. We can't keep going at 22%.
No, I mean, David, there's an incentive for workers to stay home, and there's an incentive in terms of all these higher minimum wages for employers not to hire them. I mean, look, in a free economy, in a truly free economy, there is an unlimited amount of jobs and an unlimited amount of workers. But of course, we have not a free economy, and we're headed just in the opposite direction. I mean, just this last week, it was reported, David, Biden is resurrecting the Obama-era green energy programs, exactly the programs that gave us Solyndra and all those hundreds of millions of dollars of waste. So Biden could fix this. He could fix the inflation. He could fix the labor shortage. But all this spending is just moving us in exactly the opposite direction. And David, the markets themselves, the fact that we had such a terrible January, that's the leading indicator to watch.
Well, Michelle, there is a price to pay for everything. As Tom Sowell said, there's no solution in economics. There are only trade-offs. And the trade-off for increasing the amount of money that people get for staying at home is inflation. And the question is, which is hurting more now? I think inflation is more widespread, is hurting people more than the benefits that they get from these government handouts. What do you think?
Well, I think that's definitely true to a degree. I mean, you've got other issues as well, which is that the whole economy is contracting. At the same time, you have these rising costs of goods, with oil continuing to go up, hitting over $91 a barrel today. So, yeah, you add this all together, and you've got these labor issues, inflation issues, economy contracting, and that's really where the word stagflation is coming from. And once people really start to feel that, then you get what you're seeing: consumer confidence going down, retail sales going down, the market actually struggling. So right now, things are really sort of hitting, even with this rally. It's a rally more into resistance, I think, than a turnaround.
But John, I guess specifically the question I was asking, and I'll ask you now, is who wins out? The inflation hawks, the people who say that more Americans are getting hurt by inflation, or the welfare state advocates, the people who want to increase from 22%, use 22% as the base for how much money the government hands out?
I mean, David, no one wins from inflation except the politicians who are able to brag about, how many jobs they're bringing to the economy, and they take the credit for spending all of our money and debasing all of the value of our savings. But who do you think,
Jonathan, forgive me, who do you think wins out? The welfare state advocates or the inflation hawks?
Well, David, I think, unfortunately, the welfare state advocates win out in this scenario. I mean, the bull market now, when I look at the markets, the bull market isn't in growth. It's not in stocks. It's in commodities. And it's everything from natural gas and lumber and soybeans and all the rest. So people don't see inflation. It's eating in their pockets. And unless you got a 7% raise last year, you lost money in terms of keeping up with purchasing power. that trend isn't reversing anytime soon.
Well, speaking of bull markets, it's only a day. It's one day in the life of the markets, and they're long-term, of course, Michelle. But right now, the NASDAQ is up 340 points. That's a 2.48% gain. And as long as it stays above 326 to the plus side, it's wiped out the losses for the year. It's not so with the S&P and Dow, but for the NASDAQ, today could be the day that they wipe out the losses for the year. Is this sustainable or not?
If I had to really take a guess, I would probably say no, because I see much other bigger threats to the market right now. Obviously, this jobs report is going to be one of them, the Fed and how hawkish they're going to be another. But right now, yes, I mean, it's a great day in the market, and it makes the dip buyers look really smart. But we're getting into some really mean resistance, but we also have some big earnings this week.
Yeah.
So there's a lot there. Let's put it this way. If you're not already long, I might be a little bit more patient here to see if we can sustain this.
Jonathan, what about you?
Well, David, the big money is made on the big moves. And I think, anyone who's trying to Michelle's point, jump in and jump out. I mean, that's really not the way that big money is made on Wall Street. But I think if you're looking a year, 2 year, 5 years out, there's a lot of indications from unrest in Europe to, as Michelle talked about, what's Biden's doing and inflation. There's a lot of indication that at least the boom years for this moment are over.
Yeah, a lot of people are saying wait until that first rate hike in March and see how the market reacts to that before you jump in here. Michelle Schneider, Jonathan Hoenig, good to see you both. Thank you so much for being here. Appreciate it. Well.